Hey guys, what's up? Welcome back to another video. In today's video, I have a stock here that could potentially be trading at a very heavy discount relative to their intrinsic value per share, and that company is Mercado Libre. And so for anyone watching this video who may not know, Mercado Libre, they're essentially a company that was founded in 1999, and they're Latin America's leading e-commerce technology company. And so basically what their platform does is it allows businesses and individuals to trade products and services similar to Amazon in North America or in the United States. But their products range a wide variety of different categories like home decoration, consumer electronics, toys, groceries, apparel, and beauty. So they're basically just a large general store that primarily focuses on Latin American countries like Brazil, Argentina, Mexico, and other countries in Latin America. And we can see from their stock performance over the last year that their stock is down about 51% in the same year that the overall market is down 12%. So they are underperforming the market at the moment. But we'll see after looking into their financial statements and the discounted cash flow analysis that I'm going to do for them that it might potentially be a good time to buy into Mercado Libre simply because of the fact that their stock price has taken such a tumble, even though their business growth has been pretty exceptional. So thanks in advance for leaving a like on the video, and let's get right into it. So as we can see right here from their main website, they basically have their e-commerce segments broken up by country. And so if I were to click on one right here, like Argentina, for example, we can scroll down here and we can see they're basically just a general store that focuses on different countries in Latin America. And so if I look into their financial statements right here, we can see the first statement is their balance sheet. And we can see that their total assets are being compared for the period ended June 30th, 2022 to the period of December 31st, 2021. And their total assets during that time period have increased by about $1 billion, from $10 billion to about $11.4 billion of total assets. And then we can also see that the majority of their business is financed by liabilities as opposed to equity. We can see they have about $10 billion of total liabilities and about $1.5 billion of total equity. And so if I scroll down here, we can see their income statement. And before I get into their income statement, I just want to point out the fact that their business is primarily broken up into two operating segments, their commerce segment revenues and their fintech segment revenues. And so for their commerce segment revenues, their revenues are primarily generated from marketplace fees, shipping fees, first-party sales. So those are products that they are selling to their customers as opposed to products that other entrepreneurs are selling to customers by using their platform. And then also with ad sales. So they allow businesses to run ads on their platform. And then from their fintech segment revenues, those revenues primarily come from fees for off-platform transactions and then also financing fees. And they also provide consumer credit to their customers who want to buy products on their platform as well. And so we can see right here, they have their results for the 6 months ending in June 30th and then the 3 months ending June 30th. And they're comparing their year-over-year results for 2022 to 2021. And so for the second quarter of 2022, we can see that their net revenues came out to be about $2.6 billion, which is up from $1.7 billion in the second quarter of 2021. So that's an increase of about 56.5% year over year. And so as I touched on in the beginning of this video, we could see that over the last year, their stock price has tumbled by about 50%, even though during that same period, their revenues have increased about 56.5%. So easy to see how this decline in their share price might potentially be interpreted as a red flag by some investors, but it could be seen as a buying opportunity by others. And so something else I want to point out is that their commerce revenues have grown 23% year over year, and their fintech revenues have grown 113% year over year, actually crossing the $100 million mark for the first time in the company's operating history. And also, if I look at their gross profits right here, we can see it's increased from about $750 million to about $1.2 billion. But what's even more impressive about that is that their gross profit margins have actually increased from about 44.3% in the second quarter of 2021 to about 49.4% in the second quarter of 2022. And so basically what that means is that although their revenues have increased about 56.5%, their cost of revenues have not increased at the same rate. And so that's ended up in an increase in their gross profit margin year over year, not just their gross profit amount. And so if I scroll down here to their bottom line, their net income line, we can see that they had about $123 million of net income in the second quarter of 2022, compared to only $68 million in the second quarter of 2021. And so their net profit margin for the second quarter of 2022 was about 4.7%, which is up from 4% just 1 year ago. So a pretty drastic increase in the business efficiency for Mercado Libre. And so right here, we can see their cash flow statement, and we can see that their net cash provided by operating activities came out to be about $674 million for the first half of 2022, compared to a net cash used in operating activities of about $1 million in the first half of 2021. And we can also see they used about $2.5 billion in their investing activities in the first half of 2022. And they also repurchased a little bit of common stock at about $74 million in the first half of 2022. And lastly, on this page, if I zoom out a little bit here, we can see they're basically comparing their operating segments based on their revenues by geography year over year for the second quarter of 2022 to the second quarter of 2021. And we can see that the majority of their revenues come from Brazil, and then it's also broken up across Argentina, Mexico, and then a combination of other Latin American countries. And we can see the main growth has come from their revenues in Brazil, where last year they had about $950 million worth of net revenues in Brazil, and this year they have close to about $1.5 billion worth of net revenues in Brazil. So pretty big growth year over year for Mercado Libre. And so now I want to get into the discounted cash flow analysis. And this is pretty interesting because obviously, per usual in my videos, I got these amounts from Yahoo Finance, but I actually decided to be even more conservative with my estimates in this video than I usually am, simply because if we go to Yahoo Finance right here and we go to the analysis tab for Mercado Libre and scroll down to look at the estimated growth rate for the next 5 years, we can see that Yahoo Finance analysts are basically saying that they believe that Mercado Libre over the next 5 years, compounded annually, they believe that the company is going to grow at about 136% year over year for the next 5 years, even though the company has only been growing at about 50% year over year for the last 5 years. And so if I were to boost this amount to 136%, we can see that that would put the intrinsic value of Mercado Libre at about $9,300 per share. And then if I were to cut this value in half, back to 50%, it puts the intrinsic value at about $1,500 per share, with a 50% margin of safety of about $750 per share. And if we look at the share price of Mercado Libre today, it's currently trading at about $900 per share after this pretty steep decline in their share price over the last year. And we can see that at the start of the year, they were trading at about $2,000 per share, around $1,500 per share, around there. So based on that, they were trading near their intrinsic value per share based on my more conservative estimates relative to Yahoo Finance's estimates. But if I were to use Yahoo Finance's estimates of about 136%, then that would put the intrinsic value per share at about $9,000 per share with a 50% margin of safety of $4,600 per share, which would mean that Mercado Libre would be trading at an even steeper discount than the estimate that I came to using a 50% growth rate. So with models like this, valuation models like this, it's always tough to figure out what growth rates and what metrics to actually use, because obviously these valuation models succumb to the age-old problem of garbage in, garbage out, where if you put garbage metrics into the model, you're going to get garbage metrics out of the model. In this particular case, I am pulling this estimate straight off of Yahoo Finance. They're saying it's going to be about 136% over the next 5 years. But for me, I would prefer to be more conservative because I don't like to invest in companies assuming that they're going to grow at more than 100% per year. That seems a little bit more of like a wish than an actual estimate. But even at 50%, that's a pretty steep estimate as well to assume that a company could grow 50% compounded annually. But this is a more conservative estimate than Yahoo Finance's, and even at this conservative estimate, Mercado Libre is trading well below their intrinsic value per share due to this recent steep decline in their share price. And also, we can see over the last 5 years, they're up about 200%, which is beating out the rest of the market, which is up about 50%, even though they're losing to the market over the last year or so. So this could potentially present a good buying opportunity. I'm not so sure. I'm going to keep my eye on Mercado Libre. Definitely let me know if anyone watching this video is planning on investing in Mercado Libre or what they think about this stock or this company. Is it a red flag or a buying opportunity? Let me know in the comments section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.